Yo, I know who it is, man. It's your boy Do It Jack. I'm back in the mix. I'm back in action. And this is what's your hustle. Well, hustling's a way of life. About hustle, I'm talking how you survive through life every day. This video here is about how I made about 50% on my money investing in the stock market over the past 3 years. Now, 50%, okay, and we break it up into three pieces, that's about 17% per year of gains that I have gotten on the stock market. Now, there is no maybe, no he line, no none of that. You know why? Because I'm getting ready to show you. Where my cell phone at? Boom. Right here. You know, I use Robinhood for most of y'all who watch this. I invest using the stock Robinhood, and I'm going to show you exactly the gains that I have made. Okay, we're not going to talk specific numbers, but I'm just going to show you the percentages of the interest that I have earned. Okay, now you will hear a lot of people on YouTube or whatever it is, they'll tell you, give you strategies or stocks to invest in, people who call themselves stock gurus and all kinds of things. But you notice they never show you their portfolios because I guess it's supposed to be so secretive. Is that just their way of telling you, hey, look, I'm only making about 5% on my money in the past freaking 25 years, whatever, right? But no, we're not going to do that. I'm going to prove to you. I'm going to show you that I just don't come on this camera and just talk. That the things that I talk about are true, and I have proof to show you. So let's go ahead and dive in so I can show you exactly what's going on with your boy Do It Jack stock portfolio. All right, everybody. First things first. If you've been following the stock market, okay, as of Friday, today is Sunday that I should be dropping this video, but the stock market dropped about 400 points, which was a pretty awful day on the stock market. As a matter of fact, the year 2019 has not necessarily been the best year for the stock market, and specifically over the past month or two, I would say the stock market has been kind of on a downturn, so to speak. Okay, but this is the weekend, and obviously the stock market isn't open on the weekends. But as you can see here, let me throw my code in there, that over the past day here, hopefully, let me see if you can see that. I lost about 5.6% on the stock market. That was in one day. Okay, so not necessarily a good thing. All right, and as you can see, the graph over that current day, it was just going down, down, down. It just wasn't good. Now, over the past week or so, it looks like I might have lost about 4.5% as well. So, for most of us who don't have thick skin, these type of fluctuations in the market will scare you. They will cause you to want to sell all your assets and take all your money out. Okay, so you have to think of this thing as a marathon and not necessarily a sprint. All right, now look at this. Now this right here, it almost broke my heart. I'm going to be completely honest with you. I lost about 16%. Okay, that's what it looks like. I lost about 16% of my money within the past month, which is just absolutely devastating. Okay, but again, I keep playing this game with a long-term goal in mind. Okay, so the past 3 months, it looks like I probably I'm somewhere around 2.3%. Looks like that what I went down, but we're going to keep going here. And in the past year, okay, it looks like I've lost about 24% in the past year. So that isn't necessarily that great. But here is why I say you should play the long term and not necessarily the short term. Okay? Now, over the past, since January 1st, 2016, I've made 49.5% of my money. Now notice, when I go from any of these days, you see it's orange. Orange is bad. Green is good. That means I'm on the uptick. My portfolio, the value of my portfolio has increased by 49.5%. Now you see this graph here, right? That is how you want your graph to look. Then you see I took a major dip around here, then it kind of went up, and now it's dropping again. But this right here, it will break your heart. I'm getting ready to show you this, right? Let's see here. Around September of last year, okay, around a little bit past this time last year, September 28th, I was up 124.79% on my money. Golly. And a lot of that, my portfolio has depreciated. Okay, that doesn't mean you lost it. It just means that it depreciated. So a lot of people will look at that and say, dude, you lost a whole lot of money, but they don't understand that I was already up. You know what I'm saying? And then once I got down to 50%, which is where I'm at now, that for most people will be like, well, damn, that's really good. But if you could have stayed at that 120% though, right? But again, you know what I'm saying? I know that I'm going to get back there eventually. Now, like I said, Friday was a really horrible day, pretty much last week, pretty much last month for the stock market. Okay, before Friday, I was up about 55% on the market. Now it's down to what it is now, which is about 50%. So, how did I get 50%? All right, a lot of people want to know, like, what stocks do you invest in? My biggest winner, I'm just going to start with him, is Advanced Micro Devices, okay? As you can see, I bought Advanced Micro Devices around $8.34. Let's see, the stock price right now is about $29.38. Okay, so I made about 252% on my money. Well, I'll be. That right there is what I would consider a winner. Square Inc. Okay, Square Inc. They're currently priced at about, let's see here, can I get that in better focus? I think that's about as good as I can get it. About $61.70. I bought them around $22.83, and I made about 170% on my money. Those are just some of my winners, and I'm looking at others that will be even bigger winners, okay? So there you have it, and there is proof that I have earned 50% of my money. So if I put $10,000 in, okay, which is not that much, that means by this point I would have made about $5,000 extra that I definitely didn't work for. I didn't clock in, I didn't create a product, I didn't do anything but simply press the buy button. So there you go. This is why you should invest in the stock market. All right, so you just saw it there. There's proof that I did make indeed 50% of my money on the stock market. But who gives a damn if Do It Jack made 50% on his money? You're watching this whole video to see that I have proof and to learn what I did to make that money. So without wasting a whole bunch of time, because this video is running much longer than I wanted to, I'm just gonna tell you my strategy for getting the type of gains that I did. Number one, I invested into companies that I knew a little bit about the direction in which they're heading, okay? So meaning I knew not necessarily the ins and outs, because I don't think anybody really knows the ins and outs unless you're just doing heavy research, or unless you work for that company. But from the outside looking in, you can kind of see the direction in which the company is going. So I will look at a particular stock and I will look at the 5-year map of the stock. That's the first thing I look at without looking at any numbers, anything else. All I want to know is, over the 5 years, does your graph go this way? All right, is it going up? Okay. That's the first thing. If your graph hasn't been going up in the last 5 years, I probably won't look at anything else, okay? Your graph has to have shown a strong trend of you upticking upwards, because if that is the case, then it is likely, considering the reports and everything that comes out, that you're probably going to continue to head in that direction as long as there hasn't been a big major change in management, a product hasn't failed or something like that, okay? So that's the very first thing. So now, do you need any type of schooling for that? No. There's no rocket science involved in that at all. Does the graph go up over time? 5 to 10 years, does it go up? Okay, the second thing is, what I do is, I buy into earnings releases. Now, I'm gonna keep this as simple as possible. An earnings release is just a report that the company gives to the investors and the public at large on how well the company is doing at a specific moment in time. So typically companies release earnings reports 4 times a year, typically, right? Sometimes twice, but whatever. Now, there are financial analysts who will look at a specific company, let's say McDonald's, and they'll look at McDonald's profits over the past quarter, which will be 3 months, right? And they will say, in the following quarter, the next quarter to come up, we expect, based off of what they did this quarter, that McDonald's will increase their profits by about 2%. Now, when McDonald's comes the second quarter and they release their earnings report, and instead of 2%, they increase their profits by, for the past quarter, 5%. All right? People are going to be like, whoa, wait a second here. That was higher than what we projected. They are outperforming our analysis. So what do people going to do? They're going to throw money into McDonald's, and when you throw more money into McDonald's, that's what happens. The value of McDonald's increases, therefore leading to an increase in the stock price. I'm just trying to keep it very simple. So earnings reports are a great way for you to buy into a stock that you already know about, though, and have that. And once they beat earnings releases, okay, they have to be on a projected to beat earnings release, then you buy into the stock. Now it goes both ways. There are times when a stock goes down because an earnings release was reported and the company didn't beat by as much as they thought they would. So, like I said, we predict McDonald's will increase revenues by this percentage. Now they increased revenues, but they didn't increase by as much as we thought. Sometimes they can even decrease revenues. I'm just using this as an example. The stock price will go down. So I have picked really good stocks. Okay, that's another thing that you can do. You can look at the history of a company's earnings release and how the stock moves prior to and post earnings release. If you know that a company beats their earnings release, and every time they beat it, the stock goes up about 5%, it might be a good chance that they're going to continue to beat earnings, depending on how the company is doing based off of the reports that you're reading into, for you to go ahead and jump in. One that I did like that was Best Buy. Best Buy had a track record. I think at one point when I was first looking at them, they beat earnings release like 14 quarters in a row. And over those 14 quarters, the price will just jump. It'll just go up, and go up after every time that they beat. So I bought into Best Buy. I don't think I showed my return on Best Buy, but it's pretty nice. And they continue to beat earnings reports. Now there are times when they lose, whatever the case may be. That is my #1 strategy. I'm gonna keep it real simple. Maybe I will elaborate this on a future date, future video. This is a whole course, literally a whole course that I can teach you and show you how to really invest into these stocks and why I picked the specific stocks that I picked. There's a lot of things that go into it, like the PE ratios, the PS ratios, PB, all of that different types of stuff. But mainly what's more important than all of that is your common sense and the reports that you are reading on the specific company. I'm gonna give you a recommendation. There's an app that you can get on your mobile phone called Seeking Alpha, okay? Seeking Alpha, and what they do is, it's basically a news reporting type of app for any company that has financial analysts on it. So let's say you're investing in Best Buy, okay? You go into the app, okay? You type in Best Buy and you add it to your watch list. So for every report that comes out on Best Buy, you will get a notification to your phone so that you can keep up, whether you're at school, whether you're at work, whether you're at the gym. It doesn't matter. You don't necessarily have to be in front of your computer all day, every day to make sure that you're making a good investment. All right, so that's my little bit of advice, man. If you found something in this video that was helpful, something that was beneficial to you, please like it. The likes really matter. They help with the YouTube algorithm. I've heard from several people that YouTube hasn't even been recommending my videos. My videos don't even pop up in their feed. They have their notification bells turned on and they're not getting notifications. I don't know why. Maybe it's just the hate, but it's all good. Anyways, we're not gonna worry about it. Please subscribe to this channel, man. If you haven't done so already, follow me on IG at What's Your Hustle 1. You can also follow my event page at Do It Yourself Film Event. I go by the name of Do It Jack. Haters, you know what it is, man. It's your boy Do It Jack. So get at it.